Good afternoon. This is Duane Lowry for the DPP Grain Desk on Sunday, October 14th. It is currently 3:26 in the afternoon on Sunday. The outlook for tonight is kind of mixed. There's not a lot of news here. I think the most prevailing sentiment driver for tonight was Friday's very poor performance. Traders were extremely demoralized with Friday's weak action. Market had bullish corn data from Thursday from USDA, sharp gains, and largely all taken away on Friday. The wheat and beans have performed poorly. Traders are just extremely discouraged. They've been trying to be bullish basically for the last few months, and much of that time frame the market has underperformed expectations. We're at the bottom side of prices that we've seen since the early days of July in a lot of these cases, and charts look bad and look vulnerable, and attitude is certainly disgusted after Friday's performance. That all being said, we're in the process of trying to define seasonal bottoms, and in the case of corn, maybe the low trade is already in, but we can still check that area out again like we talked about before. In the case of wheat and beans, both of them appear vulnerable to working to lower levels before they get their seasonal bottoms. Downside risk here in beans has to be respected as being, 50 cents probably. Possibly the same statement could be true about wheat. I'm not sure how to quantify what our downside risk here is in corn, but there is some downside risk here. Maybe the low tick for the seasonal low has already been established. I wouldn't say it's not, but I wouldn't say that it couldn't be pretty severely tested as well. We're just going to have to wait and see how this plays out. There's not much here for news. Weather, there'll be some talk of harvest disruptions and delays over the next couple of weeks because of weekend rains and a little bit wetter outlook for the Midwest. But for most people, they're anxious to see the rains. They're far more interested in building their soil moisture profile than being concerned about having the final corn acres of harvest be delayed and take a little longer to get out. In the case of wheat, most U.S. wheat areas have seen improving moisture during the weekend, or will see improving moisture in the forecast. There's some dry areas of concern for the U.S. hard red winter wheat belt. Most of that concern is probably in the northwest corner of the belt. The areas of that size of that area of concern at one time this fall might have been 25%. It's probably down to 10 or 15% at the present time. So I don't think there's really a bullish storyline there. The market's been trying to talk about bullish storylines with Australian dryness concerns. That really hasn't been able to gain market traction, maybe on a given day or two, but they've not been able to string it together in any type of general theme. And if people have been trying to be long wheat based on the Australian weather pattern and forecast, they've probably been disappointed as a general rule. So that's really not gaining traction. People have tried to be bullish on South American concerns about dryness in northern Brazil. It's really too early on the calendar, and for the most part, if they've tried to trade that storyline, that hasn't worked well either. The forecast down there doesn't offer the bulls any new storyline. We've had some improving rains in parts of northern Brazil. Some will talk about it being too wet in Argentina, but I don't think that's a real legitimate storyline there either. So I don't think there's anything bullish here about weather that generates a storyline, generates buying enthusiasm. And I think that we've still got a situation that without a lot of news, just weak price action begets frustration, which begets selling and long liquidation pressures. And a lot of people bought the corn market over the last couple of days, and that's going to create selling interest above the market, and people are just discouraged. And so it's the right time of year where people are hoping for a bottom, expecting a bottom, and when they get poor price action, it's the right time of the year for discouragement to very quickly set in. Looking ahead here for the next few weeks, I think we have to be respectful of additional weakness led to the downside by soybeans and wheat. Corn maybe a little bit less so, but still could slide down in sympathy as well. But overall, we're looking for some major seasonal bottoms here from this low in beans when it's established, and I think we're within 50 cents of establishing that low. I think you're looking at probably $2 or $3 of upside potential. The odds are great that you're going to have a South American weather concern for beans, And in the case of corn, we know we have a tremendous amount of rationing to do. We also know that we are seeing signs that the cash market is well on its way to doing that rationing. You talk to feed manufacturers, they're finding all different kinds of ways to substitute corn out of the ration. You're finding importer or livestock feeders on the East Coast importing corn. So we're certainly well on our way to cutting corn demand, cutting demand for U.S. corn. So I think that for many people they've underestimated that potential, but it's clear that that's happening. That being said, I think it's fair and reasonable to think that we'll have a fairly decent price recovery in the winter and early spring for corn. And I think it's possible we could have a notable soybean rally if we get a South American weather storyline to develop, which is probably a good chance of it. But that may not happen until late December or January. So I think it's just a little bit early. We've probably got 2 or 3 weeks here yet where we could languish and develop choppy trade and suffer from liquidation pressures and discouragement, things of this nature. And I think that process here will create a seasonal bottom and some great buying opportunities, but we're not quite there yet. Outside markets have been in the process of making some major trend changes, I think, and I think that that outlook probably doesn't portend very well for global speculative investment in commodities, but we're not trading that on a day-to-day basis. I only bring it up as something that needs to be watched. As far as tonight's trade is concerned, Friday's weakness was very severe, very sharp. Traders very discouraged, and that might create some early weakness tonight. But I think that it's also possible that Friday's weakness could be seen as overdone. We might stabilize here tonight and tomorrow, get some sort of a recovery. In the case of beans, you're going to have selling 5 to 10 cents above Friday's close. I don't think you're going to be able to get much of a rally or a bounce or recovery in beans here tonight or early this week. And overall conditions look like we're going to continue to slide lower. Corn may have a little bit more bounce potential, maybe 10 or 15 cents. It would not be an unreasonable possibility. That being said, you've got selling interest building above the market there. The wheat market has potential to have a decent short-term recovery bounce. I think you have people that are going to want to try to talk about the dryness concerns in Western Australia and ideas that maybe Friday's weakness was overdone. Intermarket spread traders might be looking to try to buy some wheat here as well. So I think look for some stabilization and recovery trade tonight, maybe into Monday. But overall, I think we got another 2 or 3 weeks here where the market's going to try to search out and finalize these seasonal bottoms in wheat and beans, and in that process, the market's going to act a little bit heavy. For the DPP Grain Desk, this has been Duane Lowry. Thank you.